What's going on, guys? This is Diamond Trades and Dwyane Trade from Kane Capital Discord. And today we're going to be talking about taking trading alerts. A lot of us take trading alerts, and it can be extremely difficult sometimes when you're following somebody else's play to either have the conviction to stay in for the long term or know when to get out without getting hurt too much, right? Trading alerts can be dangerous sometimes, particularly if the person that you're following doesn't provide the best updates, and that can be challenging, right?
Yeah, absolutely. So when you're first learning to trade, a lot of people are looking for a higher level of guidance. We try to do our best in the Discord, but quite honestly, it's very difficult to kind of look into that trader's mind and to understand what they're thinking in that moment, because realistically, you don't know. On live voice, we do our best possible job to talk you guys through our thought process and what we're seeing during any given trade, but you have to have your own game plan when taking alerts. So that's what we're going to talk about. I'm going to run through how I would play some of Diamond's alerts. He's going to run through how he would play some of my alerts. And hopefully this gives you guys a better idea of how you can potentially play other traders' alerts. The first trade I'm going to cover is a SPY call that Diamond took this past Monday. He took the SPY 453 calls, 0 DTE expiring that same session. He bought them at 55 cents and let me know that it was a lotto size position. So what does that mean? It means that it's a lower level of conviction type trade, meaning that it's more appropriate to size a little bit smaller. So I'm immediately asking myself, and I'm creating a game plan, how do I want to execute the trade? He's giving me the trade idea, but now the ball is in my court to actually execute. So I'm going to size smaller because he let me know that he's sizing in a lotto size position. So I'm going to understand the level of conviction. I'm going to size a little bit smaller in this trade. And then I start to assess my risk. Where would I stop the trade out? I'm going to take a look at the chart, and I'm going to take a look at the levels of support and resistance that I had previously drawn heading into the trading session. So he might have one thing on his chart, but I might have something a bit different. So I'm taking a look at how the trade is playing out. I'm trying to create that game plan of when I would stop out. I personally use the 9 and 20 EMAs to trade. So the 9 EMA serves as a very strong level of support, especially when trading SPY on the 5 minutes. So it either is support or resistance, depending on if you're trading to the downside or to the upside. So my game plan would likely to be to close the trade out if a new 5-minute candle opened below the 9 EMA. But the point being, I'm creating my own plan. So I now have a way in my head that I'm going to execute the trade despite Diamond potentially having a different idea. Now, as the trade starts to progress, and this was a really, really nice winning trade, it ran over 100%, I'm going to start to scale out. I personally like to move my stop to entry after taking my first trend. So the last thing I want to do is let a green trade turn red. So as the trade is progressing and as I'm reaping those profits, I move my stop up and I guarantee a winner. Again, that's my trading strategy. Very important, guys. What we're simply doing is sharing ideas. But in order to progress as a trader, you have to be able to execute that trade properly on your own. So Diamond scaled on this particular candle. So that tells me that he's happy with how the trade is progressing, but he's also starting to look to lock profits. So I take a look at the chart. I look to see if we're coming up on any levels of resistance. If we're extended from that 9 EMA, for me personally, it's always a good idea to take some profits off the table. So I likely would have scaled with him. Again, as the trade continues to progress, guys, I'm making sure that it doesn't turn red. A lot of people have that question. Well, you hear the don't let the green trade turn red, but what does that actually look like? For me, that's after I take my first trim. So again, the main key here is understanding the risk when I'm entering the trade. A lotto trade is very different from a high conviction trade that has multiple days till expiration, especially when we're trading 0 DTE. These contracts can lose value very, very quickly. So I'm going to size smaller and I'm going to give myself more of a percent stop So let's say I'm sized in at half size, I can still give myself a 50% stop before I hit that pain point or that max amount of money I'm willing to lose on the trade. But because Diamond was able to share his idea with me, I can understand how I should size, which is really, really nice. And it helps us as traders to make solid trades. The next trade I want to take a look at are the QQQ 370 calls that Diamond added for $1.70 on Tuesday morning at 11:30. Now, understanding that this trade had 1 day till expiration, so it was expiring on that following Wednesday, I can size in a bit more heavy. So it's not necessarily a lotto size trade. So I'm looking to add this trade with a bit more conviction if I like the chart. For me personally, I do like this setup a lot. We have the EMAs above VWAP. We had just seen a crossover, that break of VWAP, and it looks like we're bouncing off that 9 EMA. Really, really solid call setup. So I'm going to go ahead and I'm going to add this trade with him, understanding my risk. So if I'm sizing in full, I like to use a 20% stop, meaning that the max that I'm going to lose is 20% of that position. Another way I would like to view this trade is if we open a new 5-minute candle below that 9 EMA. So whichever happens first is how I would personally exit the trade. And again, I am just detailing my trading strategy and how I would play this alert. So what we start to see is a nice move higher. Now these calls were up about 18-20%. So I would look to trim there. Diamond didn't alert to me that he was trimming, but I have my own trading strategy, my own plan. Because I'm sized full, an 18 to 20% gain is pretty solid here, guys. So I may have looked to, take some off the table here and then move my stop to entry, guaranteeing a winning trade. I'm not sitting around waiting for Diamond to give me that alert, because I know that my strategy for taking profit can be different from his strategy for taking profit. Now, he did not trim in this particular case, and he ended up getting stopped out on this knife that started at around noon. So if I did not trim with him, which ideally I would have, I start to, again, assess my level of risk. I still have that 20% stop in place. That's the max that I would lose. I see us breaking that 9 EMA, which could also be another signal to stop out of the trade. But what's most important, that I'm not waiting for his guidance. I'm not waiting for him to let me know what he's doing. I am trading my own plan. I'm thankful that he was able to share the idea with me, because I thought it was a great setup. And it was a green trade to start. But if the setup fails, as you know, it happens, we're trading stocks. That's the nature of the game. I'm prepared to protect myself if I see that downside.
All right, now it's my turn. I'm going to go ahead and cover how I would trade an alert that Alejandro sent out today on BABA puts. It was the BABA 117 puts at $1.99, expiring this Friday. So these are same week contracts. I'm understanding that that's the most volatile type of contract that I can get on BABA, right? That's the nearest expiration. And so that's the first thing that I'm taking into account, right? I get this alert at 12:50. And what I immediately do is I'm going to go ahead and I'm going to go to my chart, right? I'm going to check the chart and see what it looks like. Alejandro added in this candle right here. And immediately after looking at the chart, I kind of like this setup, right? We've got a break of VWAP to the downside. It looks like the 821 EMAs are crossed down, which is a signal of short-term bearish momentum. I see that we rejected the highs pretty well off of 120, and now we begin to fade. Another thing that I might check is maybe take a quick look at the broader indices, maybe QQQ and SPY, and see how those are trading. I know that today around this time, the indices were choppy to red. And so I would have also taken that into account, right? I see that we're under the 821 EMA, and my strategy personally is to wait for that 821 EMA test. And so even though Alejandro adds in this candle, I might have added in that next candle as we get a little bit closer to the 8 EMA, just because that's my strategy, right? I did get the alert. Now I'm looking at the chart, but I'm still applying my own framework to this trade. So I enter at the $2 199 price target that Alejandro had sent out, and now For me, I like to use 20% stop loss in my trades. And so I'm going to go ahead and immediately put that in, right? Worst case scenario, stock rips up and I lose 20% on my trade, right? As you guys can see, that's not what happens in this example. The stock immediately sells off and now I'm green, right? Personally, I like to take profit at around 20% on the upside, right? That's when I want to begin trimming, maybe a fourth or a third of my position, just to secure a little bit of profits in case this move is indeed a fake out. I can pay myself for the risk that I'm taking on the trade, right? That's just my framework around how I trade. And so I'm going to apply that to this alert. When I see this alert go up 20%, which is in this candle right here, that's likely when I would look to scale out. Now, Dwyane Trade did a good job of letting me know as he was trimming along the way. And so he actually scaled out in this candle. And so I would have received that sell alert and I would have again looked at the chart, seen what it looked like and said, okay, I would have either said, okay, this looks like a good spot for me, or you know what, maybe I want to hold for a little bit more profit, right? Another framework that I like to apply for exiting my trades is when we get a 5-minute candle close over the 8 EMA, which is that dashed line right there. As you can see throughout the afternoon, we don't get that close over the 5-minute or that 5-minute close over the 8 EMA until this candle right here, right? And so that's another signal that would have allowed me to exit this position, right? Dwyane Trade again, after his first scale, gave us another indication that he was trimming some of his profits, and he actually sold around here in this candle for 35–40%. And so that's how I would have taken this alert. I would have first received the alert, looked at the chart, applied my own framework in terms of my strategy, my 821 EMA strategy. All those things line up. The chart looks good. I would have entered here, and then I probably would have scaled out A when I was up 20%, and then B after a 5-minute candle close over the 8 EMA, all along the way receiving helpful guidance from Alejandro on updating me on his position. Okay, this second setup that I'm going to cover here is a trade that Alejandro took yesterday on QQQ. He added the QQQ 363 puts at 105 at 9:49 in the morning, this candle right here. Immediately after receiving the alert, again, I'm going to go ahead and I'm going to pull up the chart, right? One of the things that I like to look for in a put setup is to have my 8 EMA below my 21 EMA, showing me that short-term bearish trend. And in this situation, I do not see that. And so chances are, even though I received the alert from Alejandro, I went at the chart, I probably would not have added along with him because it didn't match my criteria, right? I'm not going to indiscriminately just add the trade just because Alejandro's a good trader and he called it out, right? I'm going to go ahead and look at the chart. If my framework doesn't apply to this trade, I'm going to lay off, okay? But let's say that I did take this trade, right? Let's say that I immediately followed Alejandro's alert, got in 9:49 in the morning at 105, right? I would have entered right here on this candle, and the trade initially, as you can see in this next candle, actually works out, right? The trade goes up about 16%. Alejandro did not alert any sell signal, but if I was in the trade 60%, again, decent sized profit. He didn't say it was a lot of size, so I probably would have sized full myself. Personally, I look to scale at 20%. That's my own framework. But you know, it's very possible that I could have seen that 16% gain and said, I'm going to take this. I'm comfortable with this profit, and then immediately move my stop loss to entry. Say I had not done that, the trade eventually turns around, and I would have again had my 20% stop loss in, right? That's the first thing that I'm doing after I'm entering the trade, putting in my 20% stop loss, and I would have got stopped out on this candle right here, minus 20%. The good thing about trading with Alejandro is that we have very similar strategies, right? I use a 20% stop loss and so does he. And I think that that's a really important part of trying to follow along with alerts as well. If I'm going to follow an alert, I need to understand what type of trader that person is. What type of mentality do they have going into that trade? Because if I don't know, there's a good chance that I'm going to be confused. I'm going to be lost if the play goes up. I'm not going to know when to sell. If the play goes down, I'm not going to know when to cut for a loss. And so personally, I would never follow anybody that I don't fully understand their trading style and I'm comfortable with their trading style, okay? But because I do know Alejandra's trading style, had I entered this trade, we likely would have got stopped out at similar places on this trade in this example. And so even though this trade was a loser, I'm still applying my framework to the alert that I received. I'm not just blindly adding. I'm going to go ahead. I'm going to look at the chart, and then I'm going to set my stop loss appropriately according to my risk tolerance. Okay. One important thing is that it's impossible to know what another trader's risk tolerance is, right? They don't have the same experiences in the market. There's a good chance that they don't have the same size account as you. And so it's very difficult for you to say, I'm just going to follow somebody blindly because maybe they have a higher tolerance for risk than you, right? What if the trade goes down 30, 40%? Personally, I'm not okay with that. And so that psychologically is going to hamper how effectively I can trade this trade, right? So I think that that's very important, understanding the mindset of the trader and the strategy of the trader that I'm following. I think that's pertinent to following alerts.
Along with understanding a trader's level of risk tolerance, if I see a trader alert a play that they're holding overnight, for me personally, I don't have a high tolerance for holding trades overnight because I understand that there's a very, very high risk in doing so. So if I'm overnighting a play, I'm going to size in very, very small. So I want to make sure that just because another trader has a high level of conviction or even a low level of conviction, right? Sometimes I may not know. I know that my level of conviction in an overnight trade is never high because of the way I trade, because I've had experiences with losing money in trades in one trading session to the next. I size very, very small in overnight trades. And that goes with any type of trade. And with experience, I've learned how to size appropriately when trading 0 DTE, when trading with multiple days till expiration, and when trading overnight. There is no trader that can tell me their level of conviction that will change my level of conviction. I have to have my own set of rules, my own level of risk tolerance, and my own risk management, because at the end of the day, it is the stock market. And I understand that there are so many variables working that can affect my trade. And I'm always prepared to protect my capital before anything else.
All right, guys, so to wrap up, here are some key takeaways. After I receive an alert, I'm going to run through a process. I'm immediately going to go check the chart, and I'm going to see if what I'm seeing adheres to my entry rules, right? If what I'm seeing on the chart does not adhere to my entry rules, I'm not going to add that trade, plain and simple. If it does adhere to my entry rules, I'm going to get in, and then I'm going to protect myself on the downside by using my own personal risk management framework. I'm not going to wait for that trader to tell me when to get out. Okay, I took the trade on my own, and so I have to decide when to get out, right? I will use their guidance if they're telling me that they trimmed here, if they got to stop, or if they've got a stop loss in a certain place. But I'm not going to solely rely on them because it's not their money, it's mine. And so I'm going to make sure that I'm comfortable with where I'm getting in, make sure I know if the trade goes south, where am I going to get out? And if the trade works in my favor, where am I going to begin to take profit?
To piggyback off of Noah there, it's all about having my own strategies for risk management, having my own trading plan. And that in turn also helps me to become a better trader. Noah's a great trader. So if I use his ideas and I trade based off of his ideas, I'm then going to be able to reflect and see, okay, am I seeing the same thing that he's seeing? Maybe I'm seeing something a little bit different. Why is this trade working? Why did this trade not work? And at the end of the day, it's just an awesome sort of teamwork that helps me and helps Noah to become a better trader. And it's a really great dynamic that we're using, which is why I play the other traders' alerts. Thank you guys for watching the video. We hope that you enjoyed. If you did, hit the like button and make sure to subscribe to the channel. We've got plenty more EDU on the way. Kane Capital has a lot in store for you guys. We'll see you on the next video.